Now note, at this point I had already shorted the S&P 3 times and taken 3 relatively small losers, and I'm going to show you what those look like, and I'm going to show you now how you as a trader, okay, it's okay to have biases, it's okay to have strong opinions about which way you think price is going, but it's not okay to not be objective. And this is where the footprint is quite nuanced. It's where the footprint is, in my opinion, it's extremely dynamic, because it allowed me to be objective, take my 3 losses, and get on with my job. Okay, that's what it's about at the end of the day. Yes, you're going to get it wrong sometimes, and it's important that you minimize those losses when you're wrong, and when you do get it right, you maximize. Okay, so this is the move we're talking about. This is what the E-mini S&P looks like on a 5-minute chart, and you can see this is the cash open. All right, so market opens and we drive higher. All right, now I'm going to show you this on a footprint in a minute, but I just want to identify, the areas of selling where I was in essence looking to sell the market. Okay, so the first area was that little bit of a, around that 29.11, 29.12, for a number of reasons. Okay, the second area was the 29.17. Again, I'm going to show you, the reason for these shorts in a minute. So the second area was that 29.17, and then the third was the 29.21. Okay, now most of you would have probably had the 16 to 21s. It was the swing low of last week. If you could get a 60-minute up or the dailies, that is where in essence the the mini S&P's pivoted off that 16 to 21 area. So that's why a lot of traders identified that 16 to 21s. For me, I was very interested in the 29.11s, just simply because of the price response, the price action. Okay, so we got 1 trade, 2 trade, 3 shorts. Okay, the moment I got stopped out in essence, of the third trade, which was somewhere kind of, the tweet went out more or less somewhere around here. And what I was in essence looking for, I was looking for some sort of a close below this 29.17s. Okay, we couldn't sustain a close below 29.17s. All right, once we couldn't sustain that, my third trade got stopped out, and we could see the market then rallied up to that 29.34. Okay, surprise, surprise, 29.34 is where I tweeted the market should trade to, and that did act as very good sort of resistance in the market. Okay, now it's not that I have sort of superior hindsight, okay? It's just that I'm capable of reading price action and staying a little bit more objective than most traders, okay? And that's what I'm going to show you now. I'm going to show you what that objectivity looks like. And to do that, I need to show you the footprint chart, right? So what you're looking at in essence here is I'm going to show you what an open drive looks like. In fact, let's go through. I'm going to show you in essence my execution, why I'm executing, and then you can understand, why I was trying to be short the market. Okay, so first and foremost, right, we can see that around that 29.11, as I said, I'm looking for a short entry. Now, the reason I've gotten short is because we've seen the sellers enter. Okay, and we can see that twofold. One, we see the delta go negative. Okay, we can see in the second distribution where this, this green areas. Do note, by the way, every one of these rotations is 5 minutes. Okay, so just like the 5-minute chart I showed you previously, every one of these is 5 minutes. So we can very clearly see that, there was a rotation lower. The sellers entered with a negative delta, and we can see prices started to respond. So for me, straight away, when I saw that, when I started to see these sellers enter, I was looking for shorts. Okay, so I entered my shorts around that 29.09, and I was then looking for a move back down towards the 28.94, and more importantly, a break lower. Okay, so that was the play. I was looking for a very tight risk reward. It was going to cost me 2-3 handles, and I was looking for a break below 28.94s, and a continuation effectively of the overnight move. So sort of 30-40, a really big potential winner and minimal stop. All right. The important thing is I wanted to be short, but I didn't just blindly enter. I didn't just sell. Okay, I'm waiting for those sellers to enter. I'm waiting for that negative delta, that rotation, and then I'm entering. Okay. Simply, I stop out above it. Okay. If I want to be short because there's sellers entering, the moment we get above that point where the sellers are entering, the trade is invalid. So I stop out. Market goes bid. Again, a second time, really, really aggressive selling enters, this time around that 16s area, 29.16. Again, I go short. Okay, looking for, again, the exact same thing. I'm looking for a breakdown below 29.05s, the break of 28.94s in continuation. All right, second trade. Again, note, stop goes behind where the sellers enter. Okay, another stop out. So we've got a 2-handle stop, we've got a 3-handle stop, suddenly we're 5 handles down. But keep in mind, guys, we're 5 handles down, yes, but what are we looking for? We're looking for a break of the 28.94s. Okay, so we're looking for a good, at a minimum, a good 20 handle winner. Okay, so it's okay at this point to still be looking for shorts. Market goes bid up, and a third time those sellers now enter at that 29.21, that swing level I was telling you about. Again, I enter. Okay, so 3 shorts, 3 times. I'm not entering at random levels. I'm not saying 29.21 is the holy grail short. I'm saying I'm aware of the 29.21, but more importantly, when those sellers come in, and only when those sellers come in, as confirmation on the footprint, then I'm entering the short. Okay, the third short was now entered. Okay, this time, however, we got stopped out relatively quickly. Okay, so at that point, sent out the tweet, something's not right here. Price action is very, very clearly, not bearish. Okay, why did I say it? Well, it's very simple. 3 times sellers have entered, but what are those sellers achieving on the day? Okay, 3 times at 11s, again at 16s, and again at 21s, they entered 3 times. Not my opinion, the objective. Okay, the facts. The sellers entered at 11s, 16s, and 21. What did price do at that point? Well, price was clearly not going down. So all this selling, but price is not going down. And that prompted the tweet. Okay, that prompted the, guess what, guys? I hate to break it to you, but the price action is not bearish. Right? Market started to then move a little bit higher. Again, note, and this was again, this time I didn't sell it because very clearly there was just no point in selling it until we got below those 17s. Again, notice the selling. Okay, this time off of 24s, really aggressive selling, but straight back up. Okay, double top market did rotate a little bit lower, mostly sideways, before we then rotated all the way up toward those 34s. Okay, and again, ding, 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 what do we notice? Off of those 36s, we start to see some sellers enter. All right, however, into the close, we kind of remained somewhere around that 33s. Okay, didn't really ever get much below those 34s. Now, why am I showing you this? I'm showing this because the first and most important thing is to make you aware that, yes, I do take losses. Okay, yes, I do have biases. Yes, I believed that S&P was going to dump and go more aggressively to the downside. Of course, I'm human after all. But what I don't do is I don't make the mistake of believing that it's a short, without regarding what the market's doing. Okay, and that's what you have to do. If you want to start becoming a better trader, you're going to have to start trading off of facts. You're going to have to start trading off of price action. Okay, now price action is just one type of fact. There's multiple different facts. Okay, you could be someone who trades with moving averages, and you could say, well, until the moving average turns lower or slopes in a certain way, I don't want to be short. Fair enough, that's a fact. But you don't execute until that moving average shows a certain slope or crosses over another moving average. That's the important thing, guys. It's okay to have biases. Just make damn sure that you're tying those biases with some form of objectivity. Otherwise, you're going to get run over. Okay, now, what this leads us to, right, is the open drive. So what we actually, in essence, saw, and I didn't see this until, someone pointed it out to me, but in essence, what we've had off of the open is an open drive. Okay, now if you go through the volume profiling course, an open drive is nothing more than where we get an impulse move at the open of the cash. Okay, so we get that impulse move, shallow pullback, so it's an initiative move to the upside, shallow pullback, and those buyers enter on a shallow pullback and they take market higher and higher and higher. Now, as a rule of thumb, I'm going to get a footprint up. As a rule of thumb, when you have an open drive, the market will trend in that direction all day. Okay, and this is what it looks like on a profile. Okay, so I've separated that B print. What you can see is we get that beautiful little, sort of impulse move off the cash open. The C continues, the D continues, the E continues. Market facilitates, trade sideways. We have a nice chunky volume, so a lot of two-way trade. Market continues. Okay, that's very, very typical of an open drive. Now, what I will say is, you notice the little pretty turquoise line here. The wonderful thing about an open drive is that, yes, sometimes you're going to miss that move. Sometimes you're not going to partake in that open drive like I did. I didn't even see it yesterday until the debrief session. So the important thing is that it's okay to miss these trades, but it's not okay to miss what they mean. Okay, now, the fact that open drives in the market means one of two things. Today, okay, being the 7th of May, prices should hold bid to the upside. Okay, we shouldn't really be collapsing so long as 28.93s holds. Okay, if 28.93s holds, prices should, at some point over the course of today and the rest of the week, continue to rotate higher and fill in the gap at 29.49. That being said, if 28.93 goes, right, we should get a very quick test of 28.83 and also a follow through of 28.83. In other words, above 28.93s, we still want to be looking for buy side opportunities. Below 28.93s, we want to be looking for sell side opportunities. Not because I say so, guys, not because I'm biased, not because I believe in Trump or anything, but because if you go and look at all the open drives of the last 5-6 years, you'll notice every time an open drive gets taken out, we get continuation in that direction. Why? Because of the positioning. In other words, at 2:30 p.m. yesterday in the US, or in BST, the start of the US session, buyers entered the market. They positioned themselves long. Once we take out that positioning, the market should move to the downside. Okay, hopefully that makes sense to all of you. So that's the crux of the open drive. Now, where I do want to just leave you with is the concept now of a gap fill.